Good morning, folks. How are you doing today? Listen, I got a good show for you today. Um, Here's the thing. Well, let's just get right into it, and let's get the chart started right here. Okay. Now we're going to go first to the Dow Jones Industrial Average. 24,706. She's up 177 points on the day. Uh, I'll tell you, honestly, I just see the market right now going along pretty steady. Up days, down days, but I don't really see anything big happen until the end of this month. Uh, and then I see, as it progresses into next month, not a whole lot happening probably until about the middle of the month. And then I see problems coming. Uh, after the so-called S hits the fan. But we might get through that. If we do get through that, the problem's going to come 3 months later. The Fed's just going to keep pushing the buttons until we get the problem. Now, if we take a look at oil today is just bouncing along. I mean, just take a look at this chart, this 5-day chart. You just see it going up and down, but it's basically staying in a range right around where it is right now, $62 a barrel for sweet light crude. Now, let's take a look at the silver price. Silver price is dipping down right now. Right this minute, it's dropping like a stone. It's down 23 cents on the day so far. This is just absolutely depressing. Honest to Pete, silver. For a silver investor, we've had so much of this for so long that we basically ignore it at this point. This is what's happened to the people who are in silver. I mean, what can we say? It goes up a little bit. You start to feel good. Hey, you know what? Silver's going back up. And then all of a sudden, poof, down she goes again, And it gets depressing after a while. It just gets depressing because the price never gets above the bottom. I mean, it's down in the bottom of the barrel, and it's been staying there for the longest time. These bankers have such control. Now, we're going to take a look at cryptocurrency. Cryptocurrency, it's been suffering, and it's suffered a little bit in the last day or so. Now let's go to the 2-hour chart. And what we see is the bottom it made, and it's been slowly trying to get back up, but it had ever since about there on the chart. It's been what is that? What's the date on that? Ever since what was the date on that? About February 20th, about 20th of February or 21st of February. Ever since then, it's been just kind of like going along, like the same range, with a little up and down to it, like a little wave, but the same holding pattern, almost like a holding pattern. That's what we could call it. If an airplane was on the runway and it's just flying around in circles, that's what cryptocurrency's doing right now. It's not really going much of anywhere. Let's take a look at the cryptocurrency market capitalization. It's 428 billion. It's lost a little bit. It's 440 billion. It's lost a little bit in the last day, and you can see it reflected in these numbers of the cryptocurrencies. They're all basically in the red today. Which ones are down the most? EOS is down a lot. IOTA's down quite a little bit. OTA, or I don't know how to pronounce that. I think they pronounce it OTA. Dash 556, that's a nice coin. Dash is a nice coin. It probably shouldn't be that low on the listing. Litecoin 192, Bitcoin Cash 1173, Ethereum 787. So that's your look at the cryptocurrency market capitalizations. Now we're going to take a look at the US dollar index today, 89.59. The dollar, it's been holding its own, just about the same level. If we go back on the charts here and take a look at, say, 3 months, we see it declined, and when it was finished declining back around the end of January. All the way till now, it's been just in that same spot. It's found a slot there, just below 90, or around 90, and it's been just hovering around 90 ever since. That's what the dollar's been doing. Now, if we take a look at bonds and rates today, we see a mixed bag. The short end of the yield curve, it's been rising a little bit. The middle of the yield curve has been falling a little bit, and the long end of the yield curve, the 30-year, has been going. The yields have been going up a little bit. So it's a little bit of a mixed bag. We might as well say going nowhere. I mean, it's not doing much today. Let's see, if we checked everything, I think we've taken a look at everything today, right now, so we're going to talk about Trump, and we're going to talk about, well, you shouldn't, I'm going to tell you honestly, you should be careful what you wish for. Because I was saying on some of my shows 6 months ago, I was saying, hey, you know what, there's a huge sucking sound coming from China. I said, China's not our friends. China has been pumping inferior merchandise into America for years, and if we cut off that sucking sound, if we cut off China's trade with us, then American products will have a chance to actually shine in the world. And I was saying that Trump should come in with tariffs, you know, and honest to gosh, you know, and this is actually, looks like it's starting to actually come true. It says, trade wars set to go nuclear. United States considering broad curbs on Chinese imports. First thing this morning when the market was surging, an inexplicable rejoicing to the certainty that Trump would back down on tariffs. A nagging feeling that this was all wrong prompted us to ask, what if Trump does not back down? And follow it up with troubling rumor from strategists, namely that this is all about China. It would involve massive amounts of tariffs. Trump himself has also said the trade wars have one major target, Beijing, with the rest of the world negotiable collateral damage. Just yesterday, the United States Trade Representative made it clear that both Mexico and Canada would get an exemption from the tariffs once they agreed to fair negotiations on NAFTA. And beyond the already announced aluminum and steel tariffs, there's a number far more troubling another far more troubling aspect. Trump's protectionists push, noted by Stratgas. The number is 1 trillion. Here is Stratgas. President Trump is considering imposing tariffs on Chinese goods in response to China stealing U.S. intellectual property. This is often referred to as Section 301, and President Trump specifically mentioned this action in both his Davos and State of the Union speeches. The rumor around D.C. is that the United States will impose $1 trillion in tariffs, which would shock financial markets. We believe the 1 trillion number is too high since the United States imports $450 billion from China. Across the board tariffs would need to be 200%. Even for Trump, that is too much. But given the magnitude of what is being discussed, China would need to respond. Trump's ultimate intention is to hit China with tariffs in the hundreds of billions, if not more. It's on, and the resulting trade wars will promptly cripple all China-facing United States corporations first, followed by the rest of the S&P. This afternoon, with the unexpected resignation of Gary Cohn, this was partially confirmed. However, the full confirmation that was needed all about China came moments after the Cohn news when Bloomberg reported that Trump administration is considering clamping down on Chinese investments in the United States by slapping tariffs on a broad range of its imports in response to alleged intellectual property theft, according to people familiar with the matter. I'm going to tell you right now that if they do that, if they put a broad range of tariffs on imports from China, China is going to respond back. China's only sold 10% of their U.S. treasuries. Look at China dumping treasuries. You can look at that as happening. That would be a first response, a huge dump in treasuries. The second response might be a repricing of gold. China might actually decide to reprice gold because they've lied, completely lied. Russia and China both have lied about how much gold they have. And the United States has lied about how much gold they have. Now, the weird thing about these lies is the United States says, okay, we got 8,000 tons down in Fort Knox. They probably don't have a tiny even fraction of that. They probably got a few bars stored down there at Fort Knox, but they're probably full of tungsten. They're fake bars. They've been doing that for a long time. They've been having to fake it. Now China says, okay, we got, I think them, what they said, 1,600 tons or something. And they probably got like 23,000 tons. You know, they got way more than what they tell you they got, you know. So the United States hasn't got any, and they say they got a lot. And China says they only got little, and they really got a lot. And so what's the real truth here, you know? And China has got most of the gold, so they could actually reprice gold to what they want it to be. And nobody is going to be able to do a... I'm trying to think of the name of that when you make money off of a secondary trade. Anyway, arbitrage. Nobody's going to be able to do arbitrage with them because they've got it all. I mean, you've got to have some of the product in order to make money off of that. So if China's got it all, they're going to say, okay, sell it to us, what you got, and we don't have any. If we had a lot, I mean, that would be different, but we don't have any left over here in the West. It's all gone. It's all headed over to China and all headed over to Russia, and mostly China. They've sucked it all up. This is part of the sucking sound. And China has gotten rich off of the backs of our trade. What they've done is they've been slowly taking all the wealth for themselves in the form of real gold and real silver over to their country, smelting it down into 1 kilogram size bars and putting it in their vaults. And they're ready to go. They're ready to go. They're ready for this trade war. We're jumping in there, and we're starting a trade war, but are we ready to finish it? That's the thing. Now, ultimately, in the end, if you cut off that sucking sound from China, American industry in America would come back, and come back strong, because America and American workers are the best in the world, and we can build factories and we can build things better than anyone. Eventually, we'd come back strong, and industry would come back, jobs would come back to America and everything. But what about that transition period? Have we ever thought about that? Because what's happened is all the factories and everything have closed up. You know, they've shuttered their doors, they've sold their equipment. You know, and we rely upon China to make our shoes. We rely upon China to do this and China to do that. And they've got all the equipment and all the factories over there in China. They've built them up over the last number of years. They would have to shutter their factories, and the factories would have to come back to America. You know, because this price difference, this 25% price difference, I'm going to tell you, you slap a 25% tariff on Chinese goods, and immediately, I mean, it's going to make the American goods competitive again, price-wise. It's going to transfer industry. It's going to start to have an immediate, profound effect on the economy of both China and the United States. You would see that the Chinese economy is going to start to suffer. But what would happen from this Chinese suffering economy? The Chinese economy is ready to blow up right now. What's Trump's doing, to tell you the honest to goodness truth, could blow up the Chinese economy. It could actually, because it's the American economy that made the Chinese economy. If he actually starts this trade war. Now, they're ready for it with their gold and silver, but this is an actual war, because one side has got ready for it as best they can, the Chinese. But still, at the same time, if you cut off all American, a lot of the American trade, because if you put in a 25% tariff, they're going to have an awful lot of their trade cut off. What sort of an effect is that going to have on China? So neither side, I mean, just like any war, there's going to be collateral damage on both sides, and trying to figure out just exactly what's going to happen with this would be tremendous. And is this actually really going to happen? Are they really going to try to put a 25% tariff on all Chinese goods? This would be absolutely huge if this actually really happens. So let's read a little bit more here and try to figure out what I'm trying to figure out now is this for real? Is this really going to happen? So it says the U.S. actions would result from the U.S. Trade Representative's 301 investigation into China IP practices. This will hardly be a surprise now that Trump's chief trade advisor is Peter Navarro, author of such books as Death by China and The Crouching Tiger, What China's Militarism Means for the World. As Bloomberg added, under the most severe scenario being considered, the United States could impose tariffs on a wide range of Chinese imports from shoes to consumer electronics. Additionally, the White House could combine the tariffs with restrictions on Chinese investments in the United States, which are also reviewed for national security risks by the Committee on Foreign Investments in the United States. The Bloomberg source said that the United States is also considering a more targeted approach that would seek to rein in Chinese investments. Furthermore, the White House is looking at ways to enforce reciprocation with China on foreign investments, meaning that the U.S. would only allow takeovers in sectors that the United States companies can access in China. There is still a chance that a trade mushroom cloud could be avoided, officials told Bloomberg, and they are still examining various options, and USTR could decide to do nothing. However, when the announcement is made sometime in April, we doubt it. We doubt it will be nothing. In fact, we are quite confident that when the dust settles, Beijing will be quite furious at Washington. So they're going to make some sort of an announcement in April on this. Well, let me pause the video for a second and let me do a little research and see if I can find anything more. Okay, we're back, and we're in Bloomberg, and we're going to start the charts right here. Now, here's the thing. I found this in Bloomberg, and it says, President Donald Trump reiterated his commitments to imposing tariffs on steel and aluminum on Tuesday, saying trade wars aren't so bad. Hours later, White House economic advisor Cohn, who had furiously lobbied against the tariffs, announced his resignation. Shortly after Cohn's announcement, Bloomberg News reported Trump may hit out at China, one of his primary targets on trade since his presidential campaign. The administration is considering clamping down on Chinese investments in the United States and imposing tariffs on a broad range of imports to punish Beijing for its alleged theft of intellectual properties, according to people familiar with the matter. So there you go, from Bloomberg. So evidently, the announcement of this is going to come out in April. Evidently. This is very interesting. If they try to impose tariffs on a wide range of products, Chinese-made goods, China's going to strike back, and they're going to strike back hard. I don't know which side has the most potent weapons in this trade war, but there will definitely be an awful lot of collateral damage. Of course, all of this is coming on top. It's all April. Everything's pointing toward problems coming in April. So listen, I think that right now in the financial markets is a calm before the storm. I think the storm could be coming in April, really big, really bad. So listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next show.